Good evening, everybody. My name is Kiana Danial. I'm the CEO of Investiva. I'll be your host today for our live forex trading ideas with Orbix. We have a lot to cover. First, let me give you a little bit of an information about myself. I am the CEO of Investiva, author of Investiva's Guide to Making Money in Forex. If you do know me from Investiva, you probably know that I am more of a long-term investor in the currency market. However, today we're going to find some short-term trading opportunities for those of you who are interested. Before we start, I would like to ask you to confirm that you can hear me. We have a great crowd today. Welcome Jared, Osama, Rafael, Juan, who's Daniel, Eric, Chong, Alex, Maria, Melissa, Mohammed, and so many more. Everything is working great. Thank you, everybody, for responding. This is a live webinar, so I would be happy to answer all of your questions. If you may have, definitely ask them in the question section of your webinar. So without further ado, I want to get a jump start in today's webinar and see what is going on. And actually, before that, I want to tell you how I trade, how I figure out what to trade, right? Like today, it's 12 p.m. here in New York. It's rainy, and I've been, doing my chores, doing my job, and I want to see what opportunities are out there in the Forex market. So there are so many different ways that you can do it. One of the best ways that I normally find soothing first thing in the morning or whenever that I want to start trading is just quickly going through the charts that I have on my platform. Right now I'm looking at the Orbix platform, and there are only 7 major currency pairs in addition with a bunch of other minor currencies that you can quickly go through and see what is going on in the market. If you have been following the markets, you probably more or less know where the prices are at. The reason why I quickly go through it every single day is just to see what the market sentiment is and what are the market movers of the day, especially if I want to do a short-term trade, right? So I'm talking about the short-term and long-term trading. That is something that you definitely need to understand before you even start trading. Do you want to do a day trade? Do you want to just get into a position and get out within that day, or do you want to stay in your position longer for months or even years? That is a very important question to ask yourself before you get into a position. So today we're going to cover that. How do you figure out if you want to day trade a currency pair or if you want to stay in it for a longer period? And if you are staying in it for a longer period, what are the best ways to do it? Another thing, other than the charts, obviously, the real market movers, we call it the 5 points of the Investiva diamond. The market movers are the fundamental global economic events. The second one is the market sentiment. And the third one are the technical levels that can hold a price level for the currency to move up or further move down. So these are the 3 keys that you need to always keep in mind before getting to a trading position. And what we do at Investiva is that we go through all these points, right? We check the fundamentals, we check the technicals, we check the market sentiment, and if everything is pointing in the same direction, all of them are saying, okay, euro dollar seems like it's going to move up, or they all say euro dollar seems like it will be going down. For what period of time, that is when we decide to get into a trading position. Let's clarify that these are all trading ideas. Nobody really knows what is going to happen into the market, so there is always a component of risk that you have to keep in mind, though that is when comes the other 2 points of Investiva diamond analysis, which are capital analysis and overall. Capital is your own capital, something that I have no control over. I don't know how much money you have in your account. I don't know how much margin you have in your account. I do not know what other positions you have open. So that is something that I cannot give you any opinion on. All right. For that, we have our one-on-one coaching sessions at Investiva. Today is a live webinar, so I'm just and only going to cover the markets from a technical and fundamental and market sentiment point of view. The rest of it is on you. All right, we have that clarified. So let's say, for example, today, all right, I want to see what is juicy in the market. Okay, there are some ways you can go. But let's start with euro dollar, because a lot of people, especially I'm assuming we have a lot of people from Europe in the house. Can you just quickly tell me where you're from, everybody, so we can see what currency pairs we can cover? All right, we have a, but I can't. Canada, we have, oh, Jason from Canada, thank you. Quickly, it seems some people are having a problem with the sound while some other people are answering. Okay, we have guests from Canada, the US, Sri Lanka, Jordan, Denver, USA. Okay, we have Dubai. Wow, it's very international. So I think we can cover actually more than only euro dollar. But again, let's start with euro dollar because it has been moving today and I have been looking at it. And then we can move to other minors. All right. So this is the euro dollar, the monthly chart of euro dollar. One of the things that you can do if you haven't been following the market for a while, like let's say today you just got out of bed and said, all right, I want to see what the heck is going on with the currency market. Then I will recommend the first taking a look at the monthly chart to see over the past few years what this currency pair has been doing. This is the euro dollar monthly chart, right? And starting from back in 1994, this is basically the story of euro dollar. It has been completing a bunch of cycles right over here. All right, so it started around 118, which is just a little bit above what we are today. It went up to 138, then it dropped massively below parity to 0.82. Then it started cycling, ranging basically. It reached an all-time high over here, and now we are basically completing what we call a saucer top pattern right over here. If you haven't watched our education videos, definitely I do recommend. But quickly, a saucer top pattern, it starts basically at a bottom, right? And it goes all the way and completes a cycle. It is very common in the currency market. Most currency pairs move in cycles, unlike the stock market. Stock market, some stocks move in cycles, but bigger companies like let's say Google or Apple or all the ones that everybody's familiar with, they are not cyclic indices or instruments. They only go up. But the currency market is different. The reason why is that is basically a challenge, what we call at Investiva a dancing between two currencies. In the case of euro dollar, Mr. Euro and Miss USA, just imagine that they are dancing. Let me give you an example right over here at Investiva. This is a dancing metaphor, right? So for example, yesterday we covered the pound-yen pair. Mr. Pound and Miss Japanese Yen are dancing in a pair. It's a constant struggle. So even if the British pound gets stronger and stronger all the time, Japanese yen is going to get stronger and weaker at the time as well. So they continue moving in a cyclic movement. I mean, it is apparent in other currencies as well. Some currencies more or less. So for example, dollar Swissy, they're basically kind of at the same strength. So their cycles, especially recently, have been coming smaller and smaller. Pound, dollar, again, you can see there are so many cycles, you see. So it's not like that the market is always going up or always going down. Dollar yen is another great example. This is a monthly chart of dollar yen. Up and down, up and down, up and down and up. And now it's going down again. Look at this. Oh my God. This month has been crazy for dollar cat, the dollar yen. Dollar cat, speaking of which, is this one. Again, we have two other kinds of cycles. So there are so many different kinds of cycles. So over here with dollar cat, for example, we have double bottom pattern is in the it's forming, right? which started back in 2003. All right, these are the monthly chart. For those of you who are joining us right now, don't get confused. With Aussie dollar, we have other kind of cycles. This kind of looks like an angled double top pattern. All right, that it seems like it's going to reach the neckline in the coming months or maybe even years. And then when it comes to Kiwi dollar, oh, look at the cycle. A bunch of cycles over here as well. It seems like most of the dollar crosses are completing a saucer pattern, whether it's a top or a bottom. The reason why is that some currencies, as you can see, have marked the US dollar as the second currency, and some of them have the US dollar as the first currency. When the US dollar is quoted first, that is mean that the Miss USA is taking the lead in the currency pairs dance moves, right? And that's why the stronger the US dollar gets, the higher the pair goes, and the weaker it goes when the US dollar is quoted first, and vice versa. When the US dollar is quoted second, the stronger the US dollar gets, the further down that pair moves, all right? Okay, so with that, Jason is having problems seeing the visual. Is it only Jason or everybody else can see? It seems people can see the chart. So Jason, I do recommend maybe restarting your webinar one more time so that you can see. All right, so with that, I just quickly went through all of this, and I noticed that most of the dollar crosses are completing a cycle. All right, and when it comes to yen crosses, I noticed that Japanese yen is getting very strong. Look at this, dollar yen, bam. Look at February. This is crazy how much dollar yen has dropped. Pound yen, bam. Look at February. It's crazy how much pound yen has dropped. Another one, let's see. Let's add euro yen as well. Euro yen is right over here, and we want the monthly chart, and we want it to be candlesticks. And is the candlestick on? All right, we want the candlestick. And all right, so the euro dollar also, okay, we have to make it a little bit bigger. All right, there you go. Euro dollar as well, bam, look at February. So euro yen, I'm sorry. So we know that, especially because, well, the yen is quoted second in all these pairs, euro yen, pound yen, and dollar yen, and the fact that all of these are dropping massively, that means that the Japanese yen is very strong. And that is pretty rare, because normally Japanese yen is either ranging or really heading towards somewhere. So it's like it only has two gears. It's either going up or it's ranging, right? So with that, I now realize that, all right, maybe yen crosses is something that I want to look at, because the sentiment is pretty strong. Therefore, opportunity could be great in yen crosses. All right. For those of you who just joined us, let me explain that today we're going to identify short-term trades as opposed to long-term trades. So if you're a day trader, this is the place to be. All right. Okay, so that was the first step that I took. I looked at the monthly chart of all this. Even though I want a day trade, I still want to see what has been going on in the currency pair in the past years as opposed to in the past hour. Then when I pick the currency that I would like to trade, right, then I can slowly zoom out and see what is going on. But before that, I would like to take a look quickly at the fundamentals. What is going on in the world right now, right? When we're trading Forex, we really need to be up to date with all the global economic events, and the best place to look at them is at an economic calendar. If you go to Orbex, there is an economic calendar right here, research and news, right? and you can basically see what is going on, what's upcoming. And if you don't know how to use an economic calendar, it's pretty straightforward. When it comes to this one, this is actually from FX Street. When you have one, this is yellow, which means like it's not as important. Then you have two exclamation points, which means okay, it's mildly important. And then if you have three, it's very, very important. And we have an upcoming, very important economic event from the UK when on Thursday, which is tomorrow. So pound could be something that we might want to look at. All right. Other things from Japan, that's something we were talking about. Also, we have something tomorrow. The board member is going to speak, but this is not as important. Why? Because there is probably not going to be much of a change in their policy. We did do an economic overview, global overview last week if you were present, and we went over it. And what Japan needs right now is an intervention. Otherwise, the Japanese yen is just going to get stronger and stronger and stronger. And the intervention would come during one of the Bank of Japan rate decision, or when they have a meeting that has a significant importance. We don't have any of those coming up yet. The things that we have for Japan right now coming up next week, actually no, on Thursday, are these ones. These are just the reports of how the Japanese economy is doing. Unfortunately, as I covered last week, no matter how the Japanese economy is doing right now, it seems like the Japanese yen has turned into a safe haven, and everybody is just buying and buying and buying the Japanese yen because China is in deep trouble. That is the reason why. So it seems like no matter how bad or good the Japanese economy does, the Japanese yen seems to be on a strong route, unless we see another intervention. So what is an intervention? An intervention is when the a central bank, namely the Bank of Japan, prints some money, which is called QE, or does an interest rate cut or an interest rate hike. Last time, 2 weeks ago, the Japanese Bank of Japan decided to cut their interest rates and get on to a negative interest rate policy because the Japanese yen was getting really strong. It helped the Japanese yen for one day. It went up to here, and then it was basically like a bandage on the wound, and it didn't help. And since then, Japanese yen has been on a free fall. All right. So these are all things that we want to keep in mind before we get into our short-term trading position. So for now, it seems that we don't have anything coming out from the Japan. So it is likely the Japanese strength is going to continue unless a surprise happens, right? And then with British pound, we have something coming up tomorrow. All right. So let's with that, I now decided to do a deeper analysis on the British pound because now I know that the upcoming fundamentals we have something coming up from the UK. We don't have much coming up from yen, but we have a very strong sentiment behind us, right? And also with Great Britain, with the pound. If you have been listening to any sort of news, you probably have heard the name Brexit. What is Brexit? Britain exit. And why is that? Britain is not happy with the European Union. They don't want to be in the Union anymore because they think that they're better than them, right? Because they're the land of the Queen, and there are talks that England might quit the European Union. That is massive. That is one of the main reasons why the British pound also has been dropping massively, not only versus the Japanese yen, but also versus other classes, such as the US dollar. And guess what? British pound, anything that happens with Brexit, whether or not it happens, it is going to directly affect the euro as well, because England is one of the largest economies in the European Union, and if they leave, euro is going to be in deep trouble, and therefore we can expect the euro also to drop. If though, right now with the Brexit, of course, the sentiment is bearish. They have a referendum date set for June this year, and up until then, we can expect a ton of volatility. All right, and we really don't know which direction the market is going to go after that. The UK economy itself is doing great. My prediction is if they do go ahead with the Brexit, the British pound is going to start getting strength. But until then, we're going to have a ton of volatility. Right now, the sentiment is bearish because of all the worries that what if they do and what if they don't. So everybody's just dumping the British pound, right? So for a short-term point of view, it seems like we have a very interesting recipe. We have a very strong Japanese yen, right, which is pulling the pair down. And then we have a very bearish sentiment for the British pound, which is also pulling the pair down. Okay. So let me just quickly, I'm looking at some of our questions. Nalinda is asking, what are those orange lines and others? All right, Nalinda, I'll definitely explain those to you. I actually have been developing this webinar, these charts throughout our monthly webinars with Orbix. So people who have been with us, they probably know what these lines are. But shortly, these are support and resistance level and pivot levels, which are basically the levels that the markets try to test. These are means of technical analysis. If you're not familiar with technical analysis, definitely go to investiva.com to our education side and learn about the basics of Forex, because those are very important if you are serious about trading Forex. If you don't know what these lines are, you are in the wrong place right now. This is for semi-advanced traders, this webinar. It's not for beginners, so I'm not going to spend so much explaining what all these lines are. But for those of you who do know, it's pretty clear. This is a Fibonacci retracement level over here, and this is a pivot level for the pound yen pair. So how did I set this pivot level? It's very easy. There are three ways to do this. I set this pivot level 3 weeks ago before the market had actually reached this price. As you can see, this is the monthly chart of pound yen. All right. This candlestick that has dropped, this started the 1st of February. Beginning of February, the pound yen's price level was at 170, and today it has dropped down all the way to 154, and it is testing a level that I drew 3 weeks ago. Why and how did I know that the market is going to reach this price? Why? Because guess what? All the way back in the year 2000, the market tested this price. And one other backup for that is when you use the Fibonacci retracement levels, which is when you have a strong trend. In this case, from back in 2011 until 2015, we had a strong case of an uptrend with a pound yen, right? And then it started to reverse. That is why we draw a Fibonacci retracement level starting from here, dragging it up all the way to here, to this price level, and then these levels just magically appear, right? This is called the 23% Fibonacci. This is called the 38%. This is called the 50%. The 50% is the most important level. Psychologically, because the markets are also moved by market sentiment, and a lot of traders know these levels. So this level is of a huge importance. Why? Because not only it falls right on 50% Fibonacci, but it also was tested all the way back in the year 2000. And it acted as a very strong support level, and it reversed a market trend. The market before that was going down. At this level, it started going up. Very strong level. It had the power to change the market direction. It is a reversal level. So right now, with this, there are two options with pound yen, right? If this level holds, we can expect the pound yen to start going back up. But if it doesn't, boy oh boy, if this level does not hold, that means that the sentiment behind the bearish pound yen is way stronger than we thought. It means that the pound is very weak and is going to get even weaker. And it also means that the Japanese yen is very strong and is going to get even stronger. So at this point, we're expecting the Japanese economy to do something about this. Otherwise, the free fall is going to continue. So one other thing that I want you to recognize in this monthly chart, we have 3 consecutive months of bearish candlesticks. We call this 3 black crows. All right, 1 crow, 2 crow, 3. And normally after a period of very strong bearish sentiment, we could see a period of a reversal. Exactly like this one. We saw a period of very strong bullish movement, and now we're seeing a reversal. But how far can this reversal continue? That is why we draw these support and Fibonacci retracement levels to see what levels the market is testing. All right, I'm hoping I'm making myself clear. So right now is one of the times that we really can trade the pound yen, both on a long-term and a short-term points of view. From a long-term point of view, it seems like the 50% Fibonacci could hold. That means it might even test it a little bit below it. You see like the shadows? It might test a little bit below it, but then it can go back up and continue in the route of the uptrend. So that could be our long-term trading scenario with the pound yen. And it is especially important. One other thing that you definitely need to look at when you're trading long-term is the overnight, how do you call it? The overnight rollover costs. So depending on your position on pound yen or any other currency pair, you have to pay a fee, a rollover fee. With pound yen, a bullish position on pound yen has a positive rollover fee, which means if you remain in a bullish position on pound yen, you are going to actually make money, make some interest rate. However, a short position on pound yen actually has a negative rollover fee. So if you have a bearish scenario for pound yen, you better day trade it, because the longer you stay in pound yen, the more you have to pay for rollover fees. That is one of the methods you can use to distinguish or to decide whether or not you want to trade pound yen on a short-term or a long-term basis. All right, so now that I know that the long-term kind of is like a wait and see with more signals to the upside, right? I want to see if I can day trade pound yen. What is going on with pound yen on a daily basis? All right, so on a daily basis, we have a very strong bearish sentiment, as I said before. We have broken below very important levels. I'm going to add some indicators to help me with my shorter term trading. So I'm going to add an Ichimoku Kinkohyo, which I also have covered both in Orbex Traders Library and on Investiva's education course, as well as my book. If you don't have my book, definitely buy it. It's available on Amazon. Anyways, so this is Ichimoku Kinkohyo. For those of you who are not familiar, this is basically a bunch of moving averages combined. This is the Ichimoku cloud. This is the Tenkan line. This is the Kijun line. And this is the Senko line, which is the delayed price action. And right now, as we can see, all these moving averages are basically pointing to the downside. Very bearish signal on the short-term point of view. All right, and also, as I said before, and as we saw on the economic calendar, tomorrow we have a very important announcement from the UK, their GDP. Where did it go? There it is. Gross domestic product. Very important. If it comes worse than expected, bam, the pound yen is going to shoot even lower. But if it comes in better than expected, then it's going to go up, higher up. One thing you need to understand when you do day trading or short-term trading, it basically comes down to speculations. Speculations is never, ever guaranteed, never, ever 100%. You're basically betting. It's very, very close to gambling. But, I mean, obviously there are systematic methods to do so. That is why we try to have as many odds as possible in our favor. Right now we have the market sentiment in our favor. The sentiment is bearish. We have indicators in our favor. The the indicators are bearish, right? The Japanese yen seems to be on a very strong sentiment momentum. So mostly, basically, with a short-term point of view, it seems to be a sentiment-driven market, and the volatility is going to become very, very high in the next 24 hours until we have the actual report out of the UK. All right, so this is the daily chart. I want to now further zoom in and look at the 4-hour chart. All right, so even though I already did the again, so even with the 4-hour, the British pound remains below the Ichimoku cloud. All the other moving averages are moving downwards. So for a short time frame, we still have a bunch of bearish signals. I'm trying to remove this so that you don't get the lead indicator. All right. But other than this, I want to also do a little bit more technical analysis on from a shorter term point of view. All right. So as I said, you normally want to use a Fibonacci retracement level in a very strong trend. From a daily point of view, we have this new trend started right over here, and it's been continuing to here. The idea behind Fibonacci is that after a long period of a trend, you can expect a correction. All right, so this might confuse you a little bit. That's why I'm going to use different colors if I can. It's a little bit hard, this one. All right, please don't get confused. I'm going to try and delete this one. All right, so the new Fibonacci retracement levels are 23, the shorter ones, right? 38, 50, and 61. 61 also coincides with this resistance level, which is a top. The market did go down before, it retraced a little bit, and now is going back down a little bit and is approaching a very, very strong support, right? So again, depending on tomorrow's outcome, if the outcome is positive, we can expect the pound-yen pair to move up a little bit, possibly to this level. So this is a level that now you want to write down if you have your notebook out or you want to take a screenshot. The 23% is our first resistance level for pound-yen. All right, it's 163. If you're trading the news tomorrow on Thursday at what time it is, at 9:30 a.m. GMT, which is England, right? If you're trading the news, the moment the news come out, you want to see the previous GDP was 1.9%. The speculation, the estimate is 1.9% as well. If it comes at 1.9% or better at 2% or above, you can expect a spike back up to this level. This could be one of your targets, 163. On the other hand, if the speculation, if the data come out worse than expected, then you want to get into a bearish position, and you want to target. Now we have to use a monthly. Our next support level is the longer term 61% Fibonacci level right over here. This is one other thing you need to write down, 148. So far I've identified 2 levels for you, actually 3. The pivot level, which the price action is right now at, is 154. This is the game-changing level. A break below it will open doors for further drops to 148.50. If it holds, you can expect further up moves to 163, which is the 23% Fibonacci level on the daily chart. Okay, did you write those down? All right. So with short-term traders, if you're eager, we have a question actually over here. We have a bunch of questions. One of the questions is like, what triggers a correction? As I said, I think I already answered your question. The triggering point is basically an economic data that comes out. And we can expect that to come out tomorrow, right? Or any surprises that we don't know why. That is the reason why actually I'm a long-term trader, because we can never predict what's going to come out. But speculation can also be very profitable, and many traders try to do so. So you can now try to pick your side. Number one, are you going to be a long-term trader for pound yen or short-term? Please write your answers based on what I already said. Would you rather get into a long-term or a short-term? Okay, we get short, we get long. All right. It seems long-term, short plus long. All right. So we're getting a mix both. All right. So we're getting a mix of answers. All right. So keep that to yourself, right? So you now decided whether you want to do long or short or both. All right. Your next answer, based on what I just said, let's start with short. From a short-term point of view, based on what I just said, if you were to trade pound yen right now, all right, would you get into a short position? Would you sell pound yen or would you buy pound yen? Write down your answers. Sell or buy? Sell pound yen? I will wait. Yes, that's a very good answer. Hedge position, yes. Very good answers. Yep. Buy on reversal. All right. Yeah, so the right answer that I was actually looking for is that right now is a little bit tricky for a short-term trade because we don't have the answers out yet. All right, the answer, the data, the economic data, the trigger is going to come out tomorrow. And you want to be online tomorrow morning at 9:30 GMT, whatever that is going to correspond to your own time zone. It is going to be very early in the morning for me, so I'm not going to be awake. That is one of the reasons why I am in a long-term position with pound yen and not short-term, because normally I'm in New York, and by the time the data is out, you know, the market sentiment has corrected and it has moved, and I have already missed out on the opportunities. That is one of the reasons why I don't short trade. I'm a long-term trader, right? So with that, if you are going to be awake at 9:30 a.m. GMT, you want to look at the numbers and make the decision. If it's better than expected, go in a long-term trade. If it's worse than expected, get into sell the pound yen and target one of the levels. All right. So if you're in a short-term trade, these levels that I just identified, this one is a short-term, the 163, right? But the one that I identified on the monthly chart for a resistance is more of a long-term because the Fibonacci retracement was based on the monthly chart. So that's why I would, if you sell the pound yen, your target for a short term, which I definitely highly recommend that if you are selling the pound yen, you get into you trade it fast because of the costly rollover fee. I would target 150, somewhere in between this 61% and 50%. So somewhere around, you see, the middle of it, 150 would be my first bearish target for pound yen. So this is one other thing that you would want to write down. Now let's look at the second scenario, long-term trade. Okay, we had a bunch of technically bullish signals when it comes to pound yen. We had the 3 black crows, we have the 50% Fibonacci that is holding it right now, which also is a very strong support level, and the pound yen used to be in a very strong uptrend, and pound yen for a buy position has a positive rollover fee, and if you even remain in your position for a year, you're still going to make some money at least, right? So pound yen bullish position for a long term also is a favorable scenario. But with that one, you have to be patient, right? My prediction personally is that we could see further drops in pound yen, somewhere to 61% Fibonacci level in the long run, or even maybe lower. But eventually, by the end of 2016, we're going to see a correction in pound yen, up and even maybe higher above to the previous highs at 187 or even maybe 192. So pound yen is a currency that I am bullish on. And right now seems to be an interesting point to get in if you're a long-term trader, if you have the patience and if you have the margin. I do not see your account. I cannot stress enough. If you don't have the margin, you cannot do this this kind of a long-term trade, because if the markets go against you and you don't have the patience, you don't have the margin, you'll wipe out all your account. If you do have enough margin, if you have the patience, then this is something that you can do. You can get into the long-term bullish position when the market bottoms out, and just wait it out and make a bunch of pips in a long run up until the end of 2016. But mind you, this is going to need a lot of patience. It is not suitable for day traders. Okay, so buy on reversal. Okay, we have a lot of answers over here. Sell after the confirmation. I got it right then. I'll be up out of my sleep. Not suitable for me. All right, got it. Got it. I'm glad that I could help with whatever scenario or strategy that you think is going to be suitable for you. These are all ideas that I'm giving out. Every person is different. It really depends on your schedule. It depends on your trading account, your trading personality, and your margin, all of that. All right, and also your time zone, obviously. All right, so before we go, I would like to also cover one more currency pair. Any suggestions, any requests for the next currency pair that I cover today? We have 15. CAD yen, all right. Any other questions? Euro dollar. Oil. That is a very, okay. Okay, we're getting a lot of requests for CAD, and we also got one request for oil. They are very, very severely correlated. So let's take a look at CAD. CAD yen and dollar CAD, both kind of similar situation. Let's take a look at CAD yen. A new chart, effects to CAD yen. Monthly chart and zoom in. Okay. So here again, the yen is the same. The yen part of it is the same. We already covered that, which is perfect. We know that yen is on a very strong bullish sentiment, yen by its own. And because the Japanese yen is also quoted second in CAD yen pair, the stronger the Japanese yen gets, the lower the CAD yen pair goes. Vice versa, the stronger Canadian dollar gets, the higher the CAD yen goes. And if it gets weaker, the lower it goes. The best scenario is always if you pair up a strong currency with a weak currency. Here is an interesting scenario, again, for a short-term trade. Yen is strong, Canadian dollar is weak. Why? So many different reasons. One of the biggest reasons is oil. Oil has been, as you might know, let me actually show you the chart of oil so that we get an idea of what has been going on. Oh, by the way, Should You Invest is our new test with our financial planners. Is investing for you, finding out based on your own current financial situation. So dollar WTI. Let's take a look at the chart of oil. One thing you need to know is that the Canadian dollar and oil have direct correlation. The weaker oil gets, the lower oil prices go, the lower Canadian dollar go. Why? Because let's allow. All right, apparently I can't have it full screen. I'm hoping that you can see it. So the reason why oil and Canadian dollar have a positive correlation is because Canada depends heavily on oil exports. And so obviously if the oil prices are lower, Canadian economy is going to have less income, less export income, and that is why Canadian dollar gets weaker. And that is one of the main reasons why, as we saw back in 2015 last year, oil prices started to drop. It bottomed out at 26, and now it's kind of ranging between 34, and nobody really knows what's going to happen. Some of the main drivers behind oil is supply and demand. That's different than currency pairs, right? The more supply you have and the less demand you have, what's going to happen to oil? Oil is going to get cheaper. The reason why oil has been dropping in the past few months is because we have been getting more and more supply. Saudi Arabia, Iran, even the U.S. was trying to is getting into the mix. And last week, Venezuela, Russia, and Saudi Arabia, and also Iran agreed to freeze their oil production. That's why we saw this correction in oil. But now again today we're seeing, and yesterday we started to see a little bit more heavy. The prediction for oil for 2016 actually is positive. It's going to recover. So we can see that the oil by the end of 2016 recovers to 40 or even 44, 46, or even maybe above. And that would cause the Canadian dollar to become stronger again. All right, so that is going to be the correction for both oil and Canadian dollar. So if the Canadian dollar, now we're again talking long term first, if the Canadian dollar and oil, both of them, get stronger, the CAD crosses, whether it's yen or US dollar, will try to go higher. And then it only depends on the strength of the quote currency to either keep the prices from moving higher up or push it lower. Let me give you an example. Let me explain myself a little bit more. Let's say oil starts to really get high in prices. That will push the Canadian dollar, try to get it higher up. But let's say that Canadian dollar is getting stronger, but the Japanese yen at the same time is getting stronger. There is going to be a competition. This pair, the currency pair dancing, right? One of them is pushing the pair lower while the other one is pushing the pair higher up. Therefore, what happens in that case? We're going to see range. We're going to see no movement, no trends. We're going to see a range. Right now, the reason why we're seeing all these down moves is because oil prices have been dropping. Therefore, Canadian dollar has been dropping. Weak Canadian dollar, strong Japanese yen, bam, CAD yen pair has been dropping. Okay, so CAD yen on a long-term point of view, it really depends on both oil prices and Japanese yen strength. For now, the sentiment is bearish. Oil prices seem to have been struggling. We're still going to see a little bit more struggle up until the middle of 2016. Up until then, if we see no Japanese intervention from the Japanese economy, with this market sentiment, we could see further drops with the CAD yen towards the support levels. What are the support levels now for the CAD yen? We're going to identify them now. So one of the previous lows over here, a very strong support level of before, is a level that the pair is now approaching, 78.50. Right? And ooh, look at that. This has been the previous support back in 2003 as well. And it has been a resistance back before, and resistance turning support also is very important. So the level that the pair is approaching right now is, again, very important. Most currency pairs, as I said before, are in a very similar situation at the moment. The next support level, if the pair breaks below this level, that could be your next bearish indication or trigger. A break below this level could open doors for further drops toward the next support level, which is the previous support of 74. Let's see if historically, yes, of course, the pair has tested this level before as well. You see, like history just basically repeats itself over and over again. All right, so that is basically the idea behind technical analysis. The history repeats itself. Market participants, so look at all these levels, they identify them. Most people are familiar with them, and that's why they try to keep those levels and prevent the prices to fall below them, making these levels even more stronger. So the next scenario for CAD yen. So as you can see, CAD yen, like the lowest it has ever gotten has been here, 68, right? So again, with CAD yen also, technically as well, I mean, we just talked about the fundamentals of CAD yen, but technically as well, the lowest we can really expect the CAD yen to go is 68. And after that, after this cycle, so we have a bunch of cycles that completed in the past. So we have this cycle that completed, and then we had this new cycle. Now we're trying to figure out if this cycle is going to continue up until here, or maybe even here, and then move back up. But guess what? In a long run, in 2 years, we can definitely expect the CAD yen to go back up, right? And our first resistance level, our first bullish target, again, we rely on resistance level. History repeats itself. This purple one, you see how many times this level has been tested before? One back in 2001. It was a support level back in 2003. Now it turned into a resistance level. Again, it tested it back in 2011. So that's why we could say, easily say, that this could be a bullish target for when the CAD yen pair reverses. All right. So that was a long-term 2 scenarios for CAD yen. Again, based on your own trading personality, you can decide when to get in it. Again, if you want to wait and see with CAD yen, wait to see where the oil is going. Long-term, we know that the oil is going to recover. So at some point, we know that the CAD yen is going to start going up, right? But when do you get into a bullish position? That is the key. That is when you have to identify when the market bottoms out. And guess what? Nobody really can know. So you better take your chances. Get the odds in your like, you can even get into the market today and wait it out for 2 years. If it's like, if you're waiting for 2 years, it really doesn't matter when you get in it. But for short-term traders, I haven't forgotten about you. Short-term traders, obviously, right now the market sentiment is bearish, and we could see further drops. Now we're going to have a little bit shorter term targets for CAD pair. This is the hourly chart, very, very short. So the hourly chart is obviously very different than the monthly chart, because each of these candlesticks were formed in 1 hour. And on the hourly chart, we are actually having a formation of a triple top, or a head and shoulder pattern right over here. You see 1 top, 2 top, 3 tops, and the pair was able to break below the neckline right over here, around here. It's actually kind of ascended neckline. This is the ascended neckline that it broke below it. And when the head and shoulder pattern is ascended, actually it has even a stronger bearish indication. So in a short-term point of view, if you really want to trade right now, one of the scenarios could be short-term bearish. Getting in right now could be interesting, because right now actually the market is correcting a little bit. So you could guarantee more, like more pips basically, and your target could be 79.50. This is again a short-term time frame. And the 4-hour chart also, this makes sense. As you can see, the 79.50 has been tested in the past month twice, and there is a good chance that we're going to get it tested one more time. All right. One tip that I have for you guys, if you are getting into this position, even though the support level is at 79.50, if you want to get the odds a little bit more in your chance, have your target a little bit higher than the support level, so that if the market doesn't quite reach it, you at least get out of the market with profit. You can also use trailing limit orders for this on your platform. All right, so there you have it, short-term and long-term scenarios for CAD yen pair. Now we have 5 minutes left. I really would like to find the questions box that I think I probably accidentally closed it. If you have any questions, this is a good time to ask. If you didn't understand something that I said, if you have questions about your own position right now, or if you have a question about a different currency pair, this is the time that you could ask it. Okay, we have a bunch of questions coming my way. Let's see which one. Okay, great question. So one question is that if you can assist on pivot point strategy. Pivot point is basically where you want to see if the market breaks below or above it. Okay, so right now, for example, with pound yen, we're exactly at the pivot point right now. The pivot point is a 50%, and we are waiting to see if the market breaks below it. It breaks below this pivot levels, indicates bearish signal. Then we're going to get into a short-term bearish at 150. If it holds, if it starts to going back up, that is a bullish signal. So pivot point basically is a point that you want to see if the market breaks above or below it. And based on that, you can create a scenario. Another question. Oh, wow, so many questions. Hold on. Hold on one second. Another question is that how do you know if the rollover rate is positive or negative? That is available on your platform. With Orbix.com, I highly recommend that you contact Orbix and ask them to send you the rollover fees for each of their currencies. So they can basically provide you with the I'm trying to find to see if we have it over here on my platform. It seems like I don't have it. I have it on a different platform that I have. Definitely contact Orbix or whoever that you're trading with and ask them to provide you with the rollover fees for each and every currency pair, buy or sell. All right. Other questions? Hold on one second. All right, a good question that we have is about the G20 meetings. That's a great question. Yeah, so a bunch of people actually asked this one, so let's cover this one. What is the G20 about? The G